we go. There we go. Well, Chris, that's like just awesome news. For everybody joining us, we're going to give it just a minute or two here for people to hop in. We were just talking about some side activities that we love doing that could in our retirements turn into jobs, not really jobs, but things that we love to do. So, for those of you who don't know, Chris has he calls it small, but we would all call it big, a very active YouTube channel. So, and is doing really well there. So, thanks so much for joining us today. We appreciate it.
Absolutely. I always love to have a chance to talk to Faith.
As likewise, right back at you for that one. Bernard, I promised I wasn't going to say these words over again after the day before yesterday, but Happy New Year to you, Bernard. I love it that you hop on here all the time. So, for everybody joining us, this is the latest in mortgage today. It's a spot where we have a lender member like Chris join us and unpack what's new in mortgage, what's working, what's shifting, and what it kind of means for all of us. It's a space to listen, exchange, move forward together. So we do want your comments in the chat as we're talking along. And also register on our event calendar on our brand new website. If you haven't seen it, it is beautiful. So go out there and check it and find the events page and join us every other Friday here for a conversation about what's going on in the industry. Probably should have introduced you right away in the beginning, but I have with me today Chris Robertson, who is the SVP of Mortgage Operations Manager at Right by You Mortgage, which is owned by Fidelity Bank. Chris, you're a pro at this, so just hop in here and share with us a little bit about you and a little bit about what is going on at Right by You.
Well, Right by You Mortgage is, as you mentioned, just a division of Fidelity Bank. And Fidelity was founded in 1909. So we've been around a few minutes. And in 2025 alone, by the way, I just wanted to share this with you. We were voted the number one best in-state bank in North Carolina by Forbes. And as most people know, North Carolina has a
Cool.
lot of banking powerhouses. So that's a pretty impressive ranking. We also were ranked in the top five among the top banks by American Banker, top banks in the nation. We've got a five-star superior rating from Bauer Financial. We ranked number two in the S&P Global Market Intelligence report of the best deposit business among banks across the nation with assets of $3 to $10 billion. And finally, the other award that we won in 2025 was the best local corporation by the WRAL Voters Choice Awards, and that's just our big TV station here in the Raleigh area.
Oh, nice for you. What great recognition.
Yeah, it's a great bank, and I'm very proud to be a part of it. And I came to Fidelity in 2018 when Fidelity was brokering loans, and they wanted to build out the full lender platform. And I came here around the same time that Melissa Langdale, who a lot of people know, came here as well. And together we worked to build out the operations. And I'm really proud of what we've accomplished here because we did build some portfolio products as well. And just the interest on the portfolio products pays all of our fixed operating costs every month. So we're in profit essentially before we ever close a new loan every month. So the bank really likes that. And it truly is a great place to be. And, it's one of those things you can put on a resume, but I don't figure I'll update my resume again because I'm retiring after this one.
Is that right? I always say that. I think Jody's on here, and I'll just say it. I'm either going to get booted out of the mortgage collaborative or I'll retire from here. I say that quite often. I love, like you, it's no news to anybody that I love it here, and would be a great place to end a wonderful career in mortgage. And I'm sure you feel exactly the same.
Absolutely. I think it's underrated to just have great job satisfaction, to really like where you work and the people that you work with. To me, sometimes that's even more important than the money. I mean, don't get me wrong, we all want to be paid to go to work, but there is something to be said for working around people that you really care about. So,
Yeah,
anyway.
absolutely. Absolutely. Well, I'm so glad that you found that space and you're in that space. Let's talk about some of the things that are going on out there in the industry. One of the first articles that I found, that I wanted to just like get your opinion on, is it was Housing Wire. And there have been other articles out there about this, but we've talked about the mortgage lockdown theory for ever since, the pandemic and lower interest rates ended and all of those things. And they posted a new article that is homeowner data that challenges that theory is really what is going on. And a lot of it really made sense to me. I think people were very shocked in the beginning when rates moved up rather quickly. And people, of course, got very accustomed to seeing those twos and threes out there. Um, but right now, there are more homeowners that have rates above 6% than below 6%. And that continues the share of households with mortgage rates, between 3 and 6 has continued to fall. What do you think? I know I sent you over the article. What do you think about that? Do you think that people have just finally settled into understanding that this is the world we live in now?
Yeah, it is a lot of that, Faith. I think that if you look, obviously, we all know this because we work in the industry, but if you look at historical rates, these are not bad rates at all that we have. It's just that, we got spoiled for a little while. But what we do know is that life goes on. Those life changes happen, whether it's a relocation for a job or, you need to upsize or, you want to downsize or whatever those things are, even things like divorce that just force financing. And so, we know that one of the biggest assets I think that we have is our prior book of business. All those customers that we've done loans for in the past, they still have life happening. And so, we try to stay in touch with those people. And I think that, a lot of people are giving up those lower rates because of those life changes.
Yeah. Well, the other thing I think that it was one of the things that I took away from this is housing tenure. So it used to be that people moved every 3 years. And I think there have been a number of things that have happened. Number one, more people can work remotely, probably, except for during the pandemic where some people have, brought it back in, but can work remotely than ever. Technology allows you to do a lot of things that you didn't used to be able to do. And so people, I think, are choosing to live where they want to live. And then they're finding the job that supports them doing so. So they may not be moving every several years or 3 years. Or I came from relocation. So a year and a half is in my mind, but that's not true for the normal human in America, probably. But it's tripled, it's doubled and tripled since 2008, which is really, in the scheme of things, not that long ago.
Yeah, that's true. And, I know when we bought our first house around 2000, that, that was what we were told. Buy this, live in it a year or two, flip it. You can go to a more expensive house and you're just going to keep moving up and keep moving up. And I think that we've kind of reached the apex of that with the way house prices, especially since the COVID pandemic, they doubled in a lot of areas just in a very short time, and it makes it a lot harder to continue to employ that strategy.
Yeah. The other thing that I think that probably some people have taken into, rate is just one of the factors when you choosing your home, especially now. Maybe not so much before, but now, like looking at property taxes, insurance, and all of those things. If you're in a much bigger house and you can do a shift to a smaller home, that maybe those costs come down, it kind of like makes up the difference maybe a little bit.
Yeah, maybe. I know that one of the gentlemen that I work with told me at one point recently that he wouldn't mind downsizing, but because of when he bought his home, he would pay more to move to a smaller home. And so I do understand, what he's saying. I mean, we're here. I actually work remotely in Florida. As you know, I relocated in 2024 here, and or 2025. I'm sorry, no, 2024. Boy, time just gets away from
I
us,
was
doesn't it?
gonna say, yeah.
But anyway, the insurance, the homeowner's insurance here is unreal compared to some of the areas of the country, like in North Carolina, where most of our business is.
Mhm.
I know that our insurance here for our home is about $8,000 a year in Central Florida. But because we get a lot of discounts for not filing claims and being, having the hurricane code, everything's built to the new codes, we get a discount down to about $2,400 a year,
Oh, wow.
which is a very substantial discount. But then you think, well, can you even file a claim on this insurance if something happens? Because then I'm going to lose that discount. So
Yeah.
you're doing this analysis in your head that, when does it really become worth it to even use this insurance?
Yeah. At what dollar amount? At what dollar amount that you've had some sort of loss, does it make sense to increase your insurance costs? Wow, that's a
Right.
significant discount. I don't live in that climate, so I like was
Right.
not aware of that, but that's huge.
And we're not even on the coast. So imagine what the insurance costs on the coast are.
Yeah, yeah, absolutely. Well, let's talk a little bit. We started talking about this just in conversation, but like um the Washington Post, so housing is like making the news. I feel like probably more than ever before. And the Washington Post had an article this week that was talking about starter homes. What is a starter home? And did in the United States, did builders just stop building what is a starter home? Redfin has called this year, it would be this year now, the beginning of the Great Reset, when rate wages will go faster than home prices for the first time since 2008. What do you think about like what is a starter home right now? And
I have a hard time with that one because when we bought our first home, and it has been a couple decades now, but you could buy a decent home, three bedroom, two bath, for in our area there in Raleigh that we were in for, 100 to 125,000, and it was a nice home, a new home. And now, the same type of home is 3 to 400,000, depending on the neighborhood that you're in, and maybe more in some instances. And I know that wages have not grown at that rate. And so it's really hard for me to even wrap my head around how some of these folks who really don't have high paying jobs are going to be able to buy even what we're calling a starter home now. And I do think that most of the new home developments that we see are, 400,000 or more. It's you're not finding homes now that are starting with a one.
yeah, in our new developments here in suburbia, Minneapolis, I don't know what they are, well, there aren't a lot of new developments in Minneapolis because there's no land left to do that. But in suburban Minneapolis, anyway, there's nothing that doesn't start with a four.
Right.
It may be low fours, but kind of unusual. I, like you, probably similar time frame, purchased first house for 99.9.
Mhm.
My ex still lives in that home. It's worth about $380,000. And we've
Wow.
talked about it many times before. It's like, would you buy this house for
Right.
308? It's a beautiful home on a beautiful lot, but it's like I would never buy this house for $380,000. So I think that it just naturally has changed, and I would agree wages, definitely have not matched that. So, um, affordability right now, the stat that I found, remains approximately 64% below the pre-pandemic 5-year norm. But the overall trend, it appears to be going in the right direction. Um, Also, right now, there are 37% more home sellers than buyers in the US market as of November. It's the biggest gap since 2013, aside from this summer.
Yeah, we're seeing that too reflected in some of the listings in our area. The days on market are increasing. In fact, in North Carolina, which is the bulk of our business, we were up 9 days year over year on the listings. It's currently at about 60 days on market now. And of course, back during the pandemic years, the days on market were very, very short, well under
Right.
30. And this does give the buyers, though, more leverage as those homes sit on the market longer. It allows for more negotiation. We're seeing more price reductions. When we were shopping for homes, I left some of my Zillow alerts just that still come to me. And I see a lot, even here in Florida, of course, as well, a lot of price reductions on listings. And
Mhm.
then you'll see that same home, a few weeks later, and it's reduced again. And so I do think that we're starting to see that a little bit. And I'm not necessarily opposed to that because I do think that home prices got a little bit out of hand for a little while. So I'm okay with seeing a minor correction as long as it doesn't, completely upend the market.
Yeah. I have a friend, we got into this conversation just this last weekend. I have a friend that they built a new home. They still own the home that they were in. They were doing a slow transition from the old one to the new one that's about 45 minutes away from each other. And they made the decision not to, and granted, I'm in Minnesota where there's snow, but not to put their house on the market until the spring because they feel like the spring is going to give them a much greater home sale value. And I'm like, well, you're losing $5,000 a month as you're sitting on it. Do you feel like the seasonality of like what used to happen, especially in those places that have the four seasons, do you feel like some of that is gone away? Or do you feel like that will still happen because it's kind of in people's minds? Their realtor has convinced them this is 100% the best option.
I still keep hearing it, Faith, from so many people in this industry that they'll say, and a lot of them that are realtors that I know, let's list your house, in March. Let's list it in April. We want to get that spring buying frenzy, and so I do think that that's still being perpetuated, and that's what's driving. It's like we're writing our own, future when we keep saying that. But when we moved, we actually listed our home in February, and we did sell it. It went under contract quick.
Yeah.
So I do think that with remote work and all these things, that it's a lot easier for people maybe to relocate and not completely upend their lives, as it has been in past years, where you had to live within a certain radius of where you work.
Yeah. Yeah. I agree. I agree with that completely. I didn't change her mind. They're still not going to list it until March. I wasn't convincing as a real estate agent. I think if they put their house on the market, I think it was now probably more than ever. One of the things that I know you're in Florida, but
Mhm.
a lot of your business is in North Carolina. So I don't know how much condo um, business you do, but the condo business is definitely different than it has been in the past. And prices appear to be, so I'd love your perspective on this, appear to be declining more than ever. Any insight on that that you can share?
Yeah, and actually, when we were looking at moving to Florida, it was something that we considered was maybe moving to the coast and having a condo. So I did look at a lot of condos, and I can tell you that you are correct. The prices were coming down, and there were a lot of special assessments that we saw that came with the purchase. Essentially, the buyer had to pay these special assessments as well. And I think that a lot of the condos probably didn't put money in reserve the way they needed to in
Mhm.
order to make sure that all the repairs were done. And so obviously when, we had that one collapse, it really brought a lot of attention to the state of the maintenance of the condos. And so from that perspective, I believe that there were a lot of them that found they had a lot of work that needed done. And look, somebody's got to pay for that. So it's going to impact the market value of that property type for sure.
Yeah. Yeah, I think insurance, don't you think that insurance also has kind of contributed to that, to the rising cost of insurance? Or do you think it's more of a stigma now associated with condos that you see one that something like that happens with and people are fearful?
Yeah, I mean, I agree that it's just the overall costs and the unknown of all of these possible special assessments. I mean, we had a borrower recently that had a very large, like $40,000 or $50,000 they had to pay this past year on a condo that they owned. It came up when we were looking at their REO documentation. And it wasn't the subject property, but it was a property that they owned, and he had to pay. I believe it was closer to 50 than 40, but it was a big annual outlay. Now, thankfully, hopefully, it was a one-time outlay for him and he was able to afford to do that. But when these types of things are happening, it's going to have to devalue that property type.
You would, yeah, you would think. Anybody in the that's here listening with us today that has like strong condo background and are experiencing or seeing something different, would love to hear from you. I would like to talk just for a little bit about like affordability. We've kind of hit on it in a number of different ways, but like I would love to hear from you what you're seeing in your business. Are you seeing more pre-approvals that you're working on right now converting to contracts? What are you seeing in the markets that you serve at Right By You?
We actually have seen an uptick in purchase business recently, and a lot of those were some of our pre-approvals that had been on the sidelines for a while.
Oh,
And
good.
it's nice to see some of those finally find, what they wanted and what they qualified for. I do think, like you said earlier, that some people just hit the pause button. They just said, "Hey, let's wait for these rates a little bit." And now that they've kind of realized, hey, these rates are really not that bad historically, I can still afford this house. And what a lot of people in the industry will tell them: love the house, marry the house, date the rate.
Yeah.
That you can always refinance. I think some of them finally just came around and said, hey, we need to act now. But we have seen an uptick in purchase business within the last several months, and so it is nice to see that.
And optimistic about 2026. I don't think you shared back in the beginning, but like what was your year like in 2025 now that we're at the beginning of 2026?
Yeah, so we were up 37% this past year over the prior year, which is a pretty nice improvement in this market. So we are really happy about that. And we have already started staffing up a little bit for some of our plans for 26. So we have added some listings for hiring some additional operation staff so that we can ramp up our sales staff as well. So we've got a mandate for 2026 to grow the business. And that's certainly something that we intend to try to do. So it's good to see that, 37% increase year over year for us was a big accomplishment because the market, as far as rates, they were fairly stable throughout the year. We didn't really see any major drop in rates. And so we feel really good about that. And, if we ever get those rates down to where that 30-year starts with a five, like you said, there's a lot of refinance opportunities out there for
You
that as
think
well.
you think the five, you think of it is the number?
I think that if we get some rates that start with five, we've got enough business, even just in our portfolio and in prior deals that we've closed over the last few years, that we'd have a nice little mini refi boom just internally if we can retain, our own clients.
Yeah. That's fantastic. We talked a lot about affordability factors a little bit here and there, but what do you think is the biggest affordability like barrier that you're hearing from people right now? You just said that it was
Well,
down payment.
yeah, I mean, I think that what we keep being told by a lot of people is that their wages just simply didn't keep up with the type of price increases that we saw in the market. And so ultimately, what that led to was, they had their mindset on one type of home, and then all of a sudden they can't afford that type of home anymore. And, do they settle for a different home? Do they wait for things to maybe normalize, or is what we're in now the new normal? And
Yeah.
so I keep hearing just the wages not keeping up with home prices as being the biggest issue.
Yeah. The realization, the reality factor hits at some point. You talked a little bit about your team is preparing for maybe more volume. You want to grow this next year. How as a company are you doing that? What are the things that you are putting in place so that if you do have that mini refi boom come through, and I hope for everybody on this call, I hope we see that volume increase for everyone. So what are you guys doing there at Right By You to plan for that?
So we are being proactive, as I mentioned, and we are going to go ahead and hire some operational positions in anticipation of our sales manager being able to hire a few sales associates that he's talking with now. But I will tell you that we have spent a lot of time over the last couple of years cross training our staff as well,
Okay.
so that people can move from one position to another and help us as the volume flows through the pipeline. In mortgage, as you know, there's a lot of very specialized positions. And so the more that you can cross train, and it gives you a little extra depth just on
Right.
your own team. And even during like the refi boom of 20 and 21, we were able to bring in bank associates from the bank side and
Yeah.
do certain duties for us that didn't require, super in-depth knowledge. And so we do have that to fall back on as well if we need to. The bank has been super supportive of our needs when these refi booms hit.
Yeah, I grew up in a banking environment. That's where I started in the industry myself. And it's funny because I remember what you always hope is when you transition those people over that they get that whatever that is that's in a mortgage person's blood and they stay with you and
Yes.
you don't have to transition them back to the banking side of things that you train them and keep them with you. Some of the other things that we have going on, Fannie Mae expanding appraisal alternatives in the business. Have you seen any of this? It takes effect, I guess, now. Have you seen anything that you feel like has impacted that appraisal requirement yet?
Just the other day, I think it was this week, one of our loan officers was so excited because he did get the appraisal waiver on one of the loans that he was working on. And he emailed me to let me know that he was shocked that he got it because it was a pretty high loan to value as well. And so I do think that we are seeing some of those. I'm not sure. Obviously, I don't see the details on every single loan that comes through our pipeline. So I'm not sure to the extent, but I do know that we are seeing them because every now and then the loan officers like to brag, and they'll send an email saying, "Hey, look at this. I got a waiver." So,
That's fun. Yeah, it went from 80 to 90%, I believe is what the number was. Well, hopefully that will help get some people through the process as well. Um, yeah. So what else are you seeing? Are you seeing any other things in that space or in your mortgage operations that, oh, thanks, Allie. I was right. It's good to know on this Friday I was right about something.
faith is always right.
That is not true. Any of my team would be able to confirm that is not true. And she has a question too. Has anyone utilized the new 3.6 UAD? They have not just yet. So if
We have
anybody
not.
has, chime in there in the chat for Allie. But yeah. Um, Yeah, so any other things that you feel like, in your, either in appraisal guidelines or other changes that have been made recently that you feel like has given you like a lift up to help you?
Well, this is not necessarily industry wide, but something that we did that really has made a difference is we modernized our POS.
Ah,
And I think that that has made such a big difference for our borrowers' experience because we were using Consumer Connect through Encompass,
yep.
and we upgraded to the Encino integration. And I will tell you that we had before we made the switch. What motivated us to make the switch is we had several five-star ratings, 5 out of 5. But they still would make the comment that it seemed like the process was kind of old. It was the old-fashioned way of doing things. And when we made the change, we've gotten so many reviews now that compliment having the app and all the things that they can do from their phone. And, we work for a bank that's, started in 1909. They're not necessarily going to jump on technology the minute it comes out. There's a reason they've been around so long. And so it took a while to get to the point of convincing them that we needed this technology. But once we've implemented it, now the bank wants to use it for some things on their side as well. So it has gone really well. And I do think that, this slower volume period after 20 and 21 has given all of us an opportunity to look at our tech stack and see what we're using and what we can do to be more efficient and more modern.
Absolutely. Absolutely. And shout out to Encino, one of our preferred partners who people absolutely love. So you just got your plug in there from a great customer, I'm sure, to do that. It is the bottom of the hour, Chris. It is always so delightful to just sit and chat with you for a few minutes. We're going to need to do this more often than a year ago.
I agree, 100%.
Thank you for joining us. Everyone, thank you for joining us today. Join us in 2 weeks. So that would be on the 23rd for the latest in Mortgage Today. Appreciate all of you. Appreciate you chatting in the comments with us today as well. And Chris, I hope you have the most awesome 2026. We're here if we can help you with anything at all.
That sounds great, Faith. Thank you so much.
Thank you. Bye,
All right.
everyone.
Bye.